Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right, so we're talking dating apps. We're talking Match.com. As Alex Coffey mentioned as he was leaving the studio, this is like a double black diamond straight to the downside over the last several years here, off about 55, 54% from year-ago levels. I mean, what kind of data are you seeing? It's got to be probably negative, I'm guessing.
Yeah, you got to go back to late 2017 to see the stock price at this level in the 31, 32 level. So it's been a rough few years for investors in Match. And you know, you're right. The data is not great. I mean, they've got a lot of different properties. They've got Match, Tinder, Hinge, Plenty of Fish, OkCupid, and then probably another 5 or 10. I mean, they have a lot of different websites that they use. Their main competitor, Bumble, actually, I think, just has the one. So, but when you look at all of these, Plenty of Fish is the only one really that we're seeing any kind of growth in. It is one of the smallest ones, though, so it's not real big in the U.S. It's bigger in Canada, UK, Australia, other places, but it's really, that's the one that's growing, but it's really, really small. In fact, when you look at Tinder and Hinge, they actually make up 96% of our mentions for all of the groups together, and you can see where they're at on this chart. It's not good. So there's a lot of shrinkage when it comes to the number of people talking about signing up for and using these services. Even though the pool is really large. I mean, the name Plenty of Fish is great. There's 366 million fish. That's how many people there are estimated to be on online dating sites across the world. So, or across the world. I'm sorry. So, really strong market. But when you look at it, it's actually kind of starting to tail off a little bit. So when you look at dating app usage overall, it made a really strong ramp up through the late teens, and then a huge spike as COVID hit. Everybody's sitting at home. Why not pull out your phone and find somebody to talk to and meet up with? And it was a big boost, but I think there's some fatigue now. And so that uptrend that's been happening since, I mean, you can go back this chart to 2013 before you can find a real meaningful downtrend at all. I mean, it's been uptrending since then. But now all of a sudden we seem to round it off a little bit. I think people are getting a little bit fatigued on these websites or on these apps. So that's obviously not good for the company that's their primary business. So a little bit of a struggle there. Also, another thing that we don't love is their happiness. When you compare happiness of Match and all of its properties, compare that to Bumble, the main competitor, they're several points behind, 7 points actually. And again, Match has got a lot of different websites and apps that they use. Most of the big ones, Tinder's at about 54, Hinge is a little bit above that, but their highest one, I think, is Match's Bumble at 63. So they're clearly below when it comes to user happiness. I think Bumble has a different angle that's more female friendly or female centric, which is leading the cause or leading the bump in happiness there. But frankly, they're not doing that much better either. So, I mean, we're looking at Bumble's got a negative 32% on a year-over-year basis. Match is much larger than that. It's not a great situation, frankly. So neither one of these companies are doing good. We're definitely concerned. They did report, I think it was last week, they missed on guidance. They missed on expectations. They guided light. They did announce a share buyback, which bumped up the stock initially, but it popped and then dropped. It's off about 10% since that report. So definitely struggling right now with basically a 5-year low on the company. And we're not seeing a lot of great news. I'd say the best news here is that there's very low expectations from investors. I mean, this is a very, very low point for the stock. But as you guys know, a stock can go down 1% every day forever. There's no limit, so it can continue to go down. This doesn't mean it's the bottom, but investors definitely have low expectations. So if they're able to find something that can turn it around, maybe this could be a bottom, but right now I don't see that happening just yet.
Landon, when you look at this company and all the different apps that they have, is there too many of them? Are they throwing too much at people? I mean, I see there's one for seniors, there's one for ethnicities, there's one for religion. Tinder's got the biggest pool at about 11 million people. That's the largest downloaded app in the world. But they've got all these others that seem to splinter some of the viewership or the membership. Are they just doing too much? Should they consolidate some of these or give people a more clearer picture where they want to be? I mean, the stock had a huge rally during COVID and now has come from the low 180s down to basically $32, Landon. So they've certainly need to try something to get some interest. The numbers seem fine. Tinder's doing extremely well, but is there just too many names? Do they need kind of a brand name consolidation here to get a little more clarity? Because I wouldn't know which one to look at if I was going to look at them. Which one do I fit in? Old gray bald guys. Is there an old gray bald app for which one do I go to?
I think they're launching that next week, so stay tuned. Yeah, but I agree. I think that this is going to be in business schools. It's going to be, people are going to write papers about this, Match versus Bumble, because it's two completely different strategies. You've got Bumble that says, all right, we've got one website and we're going to crush it. And you've got Match that says, all right, every single segment that we can think of, we're going to build a different website and app for that segment. So far, neither one of them seems to be working extremely well. I'd say that Bumble's probably doing a little bit better, but neither one of them are doing great right now because, again, the markets have drawn back a little bit as people get a little bit fatigued. And even when we look at the usage over COVID, I mean, it was a perfect scenario for them. They sold off quite a bit as all the stocks did, but as their purchase intent was screaming higher. And that was, sort of one of those once in a 5 or 10 year opportunity to nail the stock and buy that one as it's running back. And of course, it took off after that as everybody signed up for these dating apps and started paying. That was a fantastic situation for them. But quickly, people went back to real life and meeting people and in the real world and stopped paying for these services. And the stock, it took a little while for it to follow, but it has since followed back down. I do think that I'm sure that, they're considering consolidating some. I worry that, internally, just, being an entrepreneur in technology, how many teams do you have to maintain all those websites? And they're all probably, a B-level website when if you just had a tenth of those people focused on one, it could be an A-level website or app. So I think on an expense side, they're probably spinning their wheels a little bit. But maybe the old bald guy demographic needs their own app. Maybe this religion needs their own app. Maybe this ethnicity needs their own. I don't know. I mean, they know their business better than I do. But I do agree that they've got too many out there. It's just tough to compete, and it seems like the expenses are really, really high. So that seems like a move to do when you're crushing it and you've got tons and tons of users coming in. Man, your stock's at all-time highs and you're going to expand. But right now, it seems like maybe they need to refocus a little bit.
I think the feedback here from me, it'd be probably positive. I've used a bunch of these, and if you're picky and choosy, it's awesome. It can be awesome, Landon. But looking at your data, looking at the happiness levels, do you see this turning around at any time soon with it being at these levels that we haven't seen for over 4 years?
I don't know. I mean, 56% is not a great number for what should be a fairly positive experience, right? Finding love or, dating and all that. That should be, in theory, a positive experience. 56% is pretty low. And they've got a competitor at 7 points higher. And 7 points doesn't seem like a lot, but it's a good number, especially when you're talking about two companies that are basically identical in what they're trying to do. So I'm a little concerned there. We've got to see happiness turn around. We've got to see purchase intent turn around. It's been downtrending for about a year now, purchase intent has. And once it flattens out, then I think, that's going to be a good sign. But right now, we're still waiting for it to flatten out. There's definitely upside. This is a very, very high margin business. It's just customer acquisition as long as they're not spending too much on technology, which, again, having 15, 20, whatever, how many apps that they have, that concerns me on the expense side. But generally speaking, this is a very high margin product. And so they should be able to do really well if they can get the customer acquisition costs down. the problem is that people just aren't talking about these companies with the demand level that they need to be. If I look at this demand chart, I mean, we're looking at 2017 levels of demand and 2017 levels of stock price. So they've got to do something to reinvigorate these 350 million people out there who are on the dating websites to use theirs. And the competition is tough. I mean, it's a tough market because the high margins are so strong and so attractive. But right now, earnings score-wise, I know they just reported they're still negative for us. It's only a negative 21. Bumble's a negative 35. Both of them are negative, and we really just need to see the overall market turn around and more people to start coming in. But until that demand flattens off, we're definitely bearish.
Yeah, I wonder how much saturation they've got across all these platforms and how many, potential people or consumers they can get on these apps. I mean, it might be, literally a capped number of people that would probably use these. So growth's going to be tough for this one. All right, Landon, great data as always. Appreciate it.
All right, guys, thank you.
All right.